The dollar's value has plunged recently to some of its lowest levels in years. So what does that mean for Americans? The dollar index measures the value of the dollar against a basket of foreign currencies of major trading partners. In recent weeks, that value has plunged, extending declines from last year. The US dollar has been historically strong for the last decade or so, but since the pandemic, the value of the dollar has shot upward. Now, this afforded consumers a lot of benefits, at least in the short term. It gave them more purchasing power for imports, say foreign cars or internationally made clothing, and at the same time, travelers heading abroad were able to stretch their dollars farther in places ranging from Lisbon to Germany to Japan. Over the last 18 months or so, that dynamic has flipped somewhat and has accelerated in recent weeks. My colleague spoke with a Polish furniture company that said essentially they had to boost the prices on some of their products. There have been recent events that have helped push the value of the dollar downward.
I may put a tariff on countries if they don't go along with Greenland.
First and foremost was Trump's threatened trade war against European countries. The Treasury Department has also taken steps signaling that it might move to help strengthen the yen against the US dollar. Although the Treasury Department has denied that move, that has helped the yen outperform the US dollar in recent weeks. Also in the background are questions about the path forward for interest rate policy in the United States. President Trump is pushing for lower interest rates in the months and years ahead. And while that could reduce borrowing costs for Americans, that would also lessen the amount of returns investors get from holding US government debt. There's a significant silver lining to a somewhat weaker US dollar. A weaker US dollar theoretically makes US exports more attractive, things like cars, airplanes, and other products. And this speaks to a key plank of President Trump's economic agenda. For decades, the US has run a pretty large trade deficit, which essentially means that we buy way more things from abroad than we send abroad at the same time. Now, Trump wants to flip that dynamic somewhat, and a weaker dollar would theoretically help that. A lot of folks on Wall Street expect the dollar to continue weakening this year for some of these broader dynamics at play. Folks that we've spoken with in recent days expect as much as 20% declines against currencies such as the euro, for example. That said, no one expects the bottom to fall out. The US economy is still extremely strong. It's growing at a healthy clip, and at the same time, the Federal Reserve has recently decided to keep interest rates steady. At the very least, that should provide something of a floor on the dollar.